All right, Evan, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel. Come find Jason on Patreon. And come find me on carnivoretrades.com for swing trading alerts analysis and live day trading. Anyways, let's get into it this week. So markets, I'm doing this video on Monday. But markets last week, again, kind of staged another rally. You can see just a strong open Monday and then just a little pullback day on Wednesday. But, they're able to hold up for the most part here. And we held up into the jobs number on Friday as well. We talked about this kind of extensively last week. But, the closer we get to that quarterly expiration, which is coming up soon, the more hedges are starting to decay. And you're seeing the market kind of get a supportive flow here. And we talked about this consolidation pattern as well, and it's pretty strong. So the market's acting well here, and we're seeing a supported market, despite some beefing going on between billionaires last week, which did cause some volatility. And again, part of that was from the volatility. It was actually Wednesday, it was Thursday, not Wednesday. But you can see obviously Tesla taking a huge hit off of that. I believe the largest market cap drop ever for Tesla in a single day. And that stock has recovered a little bit here. But nonetheless, market is holding up here, and we're still looking for higher prices here. I think we're going into June, and we may be able to go test that double top there, all-time high at about 6150. We're not that far away. We're only 150 points or less away from that currently. So it's not out of the question here that can happen by the end of the month. So barring any changes here, which to me would be some sort of high volume reversal. This is not a reversal. It's not, first of all, not enough volume behind it. A little uptick here, but not enough to really move the needle. And you really need to wipe out a couple of days worth of trading at least with over 100 million shares here in order to kind of signal some sort of a near-term top. But right now, market's acting well, and no problems here. We'll definitely get into precious metals as always later, but definitely on the move last week, and they're on the move here today as well. First, I just want to take a look at the triple Qs here. That held up okay last week as well, up 1/3% today. And again, jobs data. Again, this bad macro, the market is able to just walk up the wall of worry. Right, so it's not being affected by that, and that's something I've warned about here. A lot of people trying to short based on the macro, and you need the macro and the technicals and the positioning to line up. And if you don't have them, they don't necessarily, they can cancel one another out, and that's how you get this wall of worry effect here. But yeah, triple Q is acting well. We got through Nvidia earnings a week ago. We got through the jobs data. We do have CPI this week, so we could be, there could be some volatility there. This Wednesday, but nonetheless, market's acting well. We also triggered that inverse head and shoulders here on the Russell 2000 that we were talking about. We said watch out for this, and it triggered on Friday. And again, that's despite the jobs data not being that great last week. So market is acting well. It's fighting off bad news, and it's rallying on good news. So that's not a tape you want to fight. Inverse head and shoulder here on the Russell, that is triggered now, and we're up again today, up another 1.1. So small caps leading the tape here. Dow also essentially triggering that inverse head and shoulders on Friday. It has a chance to trigger it today if it it closed like right on that line. So we'll give it a pass, I guess. But today it looks like we're going to close above that. Semiconductors also had a good week last week and having a good day today. So part of the big deal today was there was Trump meeting Xi Jinping today, I guess, in London, if I'm not mistaken. But nonetheless, it's basically the assumption is that they're going to agree on the mineral deal to continue with that, and they're going to offer that they're going to walk back that like embargo or whatever on the chips. You can see Nvidia here up on the day, AMD, KLA, AMAT, Qualcomm, pretty much across the board. Everything's getting a bid here. Micron, 2.3, TSM, ASML, all chip stocks getting a good bid here today. That bodes well for the market. Chips are a very good leading indicator, and they're strong today. So you got small caps up, you got transports up, and you got semis up. Usually a good sign. Again, we're watching the transports here as well for that inverse head and shoulder, and this is curled up nicely. We never close below that inside bar low. So transport's acting well. One of my favorites, cloud software, is still acting well also. Nice breakout there last week and it's trying to continue with that today. Interest rates via the 2-year note here, so ZT futures, they backed off this week. So it does not look like we're going to get a June cut at all. And we really needed this 2-year note to rally, meaning the yields coming down, of course, which that has not happened. It has started to tick back up here. So the 2-year yield is going back up. It's not like going up fast or anything. It's just, it's holding up. But we needed that bond to rally in order to get a June cut, and it doesn't look like that's going to happen. Market is pricing it out to about September now. So I can, if you want to take that with a grain of salt, the Fed Funds futures is not very good at pricing in these things, but nonetheless, that's what's going on. You can see the 10-year up last 2 days of last week, and then the 30-year here also. Still very. I mean, this is a pattern that can, that can break to the upside. It'd be interesting to see how the market responds because I was talking about a pattern, like, well, not a pattern, but this correlation. Let me just show you. And this is what fiscal dominance looks like. So lately, the market has not been bothered. This is the 30-year yield here in purple. The market's not been bothered. In fact, you look at this, they bottomed at this on the same day, just about in April. So there's a positive correlation with the long-term yield, the long bond. That, it was not the case previously, right? The last time that their inverse was back in October 2023. Right, and this is really where that fiscal dominance regime kicked in, and you can see that the correlation is actually fairly positive now. So I'm interested to see if the 30-year starts to really break above 5 and holds above 5, starts to go towards 5.5. Does the market start to shift back, and do we see the market under pressure, or does the market just shrug it off? So it's very important to understand that dynamic. But nonetheless, yields up. XHB here. Again, nice bounce this week, or last week looking for a higher low there. VNQ trying to break out here today too. Banks held up well. They've been sideways here. We should get some volatility in those soon. KRE also having a nice pop here as well. I'm going to get rid of some of these old lines here. But you can see right now, again, like a lot of things here with that inverse head and shoulder look. So if that can break out, that's going to be positive for the market. You see the KBE there as well, and then broker dealers. Also, just off all-time highs. They love this. They love all this volatility, all this trading, especially in the crypto space. I mean, stocks like Robinhood here, really performing well, and it's really come back. It's almost back to its IPO. Well, it's actually well above its IPO price, but hit that all-time high a week later, and that's been in for a while. But yeah, nice comeback there. Anyway, oil here, breaking out. We talked about this. Say, look, take a look at the hit here of 64. Pulled back almost all the way to the double bottom, and then it took a month to get back there. And then it got back within a week after not really even pulling back, and then it just hammered on this level. So we knew that was getting ready to break, and it did. I think oil's cheap here, and it's also very interesting. It's quite cheap relative to gold too. So if I can show you here, we got oil to gold ratio just 0.5 grams per barrel. In May 2025. So oil is very cheap here compared to the rest of the commodity space. Just something else to consider right now. But yeah, oil finally getting a breakout. We'll look at 66.5 where that 200 moving average is. And then if we can get through that, I think you can maybe retest 70. So oil getting a bid here. XLE trying to curl up, needs to clear 86 to really get any momentum going. XLP, this is the one I've liked. It's oil and gas exploration, and yeah, it's trying for higher highs here. So oil and gas exploration looking better, and OIH looking good as well. So oil and gas stocks finally getting a little uptick here, and finally, I don't know, maybe just contrarian play. Maybe they're so hated here that they're finally getting a push. But nice to see that. And nat gas here, kind of a quiet week. Nothing really doing there. Uranium stocks, again, look at CCJ here. Just absolute monster move, up 12% here. URNM, beautiful breakout back above that resistance. URNJ, higher highs back above the 200. And you have, the ACLO, SMR, NNE, these stocks here continuing to act well. If we can look at Nukes ETF, that's at all-time highs as well. So uranium continuing to maintain that strong bull trend as well. Dollar index is kind of quiet last week, and it's been quiet here today. Down just a little bit, but nothing terrible. Versus the yen here, that's one we've been keeping an eye on. It's still above the OK zone, and trying to break back above the 50 MA. But that 50 MA has been resistance here, on the way down for a while. If this does break up, though, that will help equities. On to precious metals, gold continuing to hold up. I mean, we backed off a little bit last week, but nothing terrible. Now here's the kicker. That GDX just off the highs here, but silver breakout last week, and it is continuing to break out today. Here up 2.3. It's actually kind of glad I'm doing this on Monday because we can cover Monday's action here. But this is going to $40. Okay, now just so you know, every time I set a target for silver, it always overshoots. So, and this is just a medium to near term target, by the way. But this should get back to $40. Very nice breakout, and it was confirmed by SIL. Right, SIL was actually breaking out before silver. So that is a good sign. Platinum also continuing as well. Look at that move. So I did not like this pullback here because we've seen it before so many times in platinum, but they finally, it finally got the break. Look at this move. I mean, it was at 880 like a month, 2 months ago, and we're at 1219 right now. So we're going back to 2021 levels now. So 1250 and then 1300 for platinum. Palladium's also got some catching up to do as well, but this is curled up. Positioning on this is actually quite bullish too. So metals continuing to run. Commodities are acting well right now. Copper holding up also. Made a higher high finally. So that's in better shape here. Then we also have Bitcoin that firmed up as well. So right back above 106, and that was a big point of control for Bitcoin here. So yeah, equities and even commodities, equities and commodities rallying together and liking this fiscal dominance regime right now. So right now, again, unless we get some sort of high volume reversal, which I don't foresee particularly, maybe on CPI we could see a pullback. I would give the market the benefit of the doubt here, really, until proven otherwise. But yeah, it's a bull market and a lot of things here. So, anyways, guys, with that said, I will wrap it up here. Again, you guys take care. Don't forget to come find me on carnivoretrades.com. Come find Jason on Patreon, and I'll see you guys all next week.